morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Wednesday, August 21st. Markets did get a little bit of a pop as expected, and we kind of lost momentum around 12:30 yesterday afternoon. Dow Jones down 7. NASDAQ held up really well. It had an outside day reversal. Positive sign for momentum to continue. That was up 24. S&P up 6. Russell up 15. Another outside day reversal, as well as the transport. So I do see this bounce that has a little bit of legs left in it. We only had really a good half a day yesterday, so I do see the bounce continue. Now, the only thing is that we have FOMC minutes coming out at 2 o'clock this afternoon, and that could actually either help the bounce or actually let this market roll right over again. So that's going to be very interesting to see what happens and what was said in the last Fed meeting. So just keep an eye on that at 2 o'clock. Now, usually, remember, guys, we are in the end of the summer. A lot of market participants, traders, investors are gone. At least the bigger players are. They're gone. They're out of here. They're spending the last couple of weeks of the summer down the shore. So you have to realize that the markets will get skewed either to the upside or to the downside, and I mean by exaggerated moves. So you got to use caution. There's not a lot of volume left here. But you have to be ready, because I do think, and I keep saying that I do think we're coming into seasonal weakness, and the markets have been down 4 days in a row. Well, Dow Jones down 5 now. So you got to expect a bounce, and the bounce could be really pretty fierce to the upside. So I would not be looking to short anything, or at least building a short position here. You want to build it when you have a couple of green bars into resistance. So please keep that in mind, okay? Now, here's where I'm thinking that we're still going to bounce here. We have the NYMO. Now, the NYMO was oversold, and I mentioned that to you yesterday, but we did bounce right up into this area here. And we're still in the oversold territory, so we still could bounce. We have plenty of room to the upside. So I do think that that we should bounce a little bit. Now, we're down in the pre-market session, down about 4.5 handles in the electronic session. But that's really not much of anything, and I do think that that will probably get eaten up. And if anything, I'd like to see the market open down one more time today and then look to buy into that for a bounce going into the afternoon. So just keep this in mind. But this is why I'm thinking that the market still will bounce prior to the Fed meeting. Now, anything goes after the Fed meeting, but at least for this morning session, for the opening, I'm looking for a bounce in the market. Okay, now let me show you the New York Stock Exchange new high, new low. Remember, I was up at these areas, and look what happened. We came right back down again. And now we're back into these areas. As long as these areas are right up in here, into the 100, 125, we're okay as far as the market to bounce, go higher. Now, I like to see this really start to spike up, and the markets really start to sell off here, and that's when you're going to get your good bounce play like this. This is really what you want to look for, something like this. But again, this is also another sign that that's why I think that the market was going to bounce. Now, excuse me, another thing is the dollar. The dollar is consolidated for a few days, but really lost momentum yesterday. Now, the dollar is going to have an ultimatum here. This is the last pivotal low, is $80.50. To really get going, we need to take out the 50-day moving average of 82.25. I do see strength in the dollar going into the fourth quarter, no question about it. It looks like it's going to be a little bit more time. Now, if the dollar started really picking up momentum, then I would see, the precious metals, commodities sector really start to lose its luster for a little bit. But nonetheless, we got to keep in mind and got to watch what the dollar does. Very important. Here's the VIX. VIX stayed highly elevated yesterday, even though it did break down. It came back up again and holding inside day with the previous day on the 50 and the 200-day moving average. So VIX a little bit elevated, you can see here, and we're a little bit overbought. Not much in the stochastics, but the full stochastic. I'm sorry, not in the MACD as much as the stochastics, but still something to keep an eye on. Now, if we can get a black candle today and we start to roll back down, I will look to see, again, a continued bounce in the market. Now, speaking of commodities, take a look at gold. Gold here is holding in. It actually sold off yesterday, but holding in quite well up in these areas. And I like to see a nice hard run up into this area here. And then that would attract me to be a better short seller of gold than be a buyer. Now, Gold is still in a downtrend, as you can see, but it is making a higher low off this low here. So this could be a make or break point for gold. Maybe gold does go higher. So we just got to keep an eye on what it does. I'm not saying to short gold at 14.16 when it gets there. I want to see what it does, and if it starts to fail and lose its momentum, then gold might be a better short up in here. I like to be a better buyer in gold way down in here. Between here and here, gold is going to be out of favor. The metal is at least in these areas here. I'm not a big fan of at all. Now, last is the USO, which we do trade, as you know, with the crude oil. And I mentioned, guys, I wouldn't be looking to buy crude in here. Why? Because the bullish percent ENER energy sector was up at these elevated levels. And anytime when you get up in here, when you get into the 85, 95 area, it becomes a great short candidate, as you can see. Look at this. Now, again, when you have political uncertainty, geopolitical uncertainty in the Middle East, sometimes these are skewed. So you got to keep that in mind. But nonetheless, look what happened. We gapped up, we filled the gap, ran back up again, double topped, and now we're coming back down again. So I like crude, but I like crude oil down in these areas here, which would be the USO. Okay, so let's take a look. Well, let me just show you the WTI anyway. Now, this is the actual end-of-day contract. This is the light crude spot oil contract. As you can see, we caught these highs way back where a few months back, and it's holding. Now, if crude can break down below this area and get right in these areas here, but maybe right around par, I'd be buying crude with both hands. If it does break to the upside, I'd like to see consolidation above this resistance, which would be now support, and then look to buy that as well. So I'm watching crude, I'm watching gold going into the fourth quarter and see what it does. Now, here's the GLD, the inverse head and shoulders. As you can see, we've been consolidating for the last 3 days, and this is really actually bullish, because if it's holding its own at the upper level, it's holding its own here, and it's just consolidating to build more energy for another move higher. Now, the inverted head and shoulders target is 150.75 in GLD. I'm not sure if it's going to get there, but the first thing is going to be, where I think it's more logical, is going to be the 200-day moving average. Take a look at, this is the USO, and as you can see here, way back where we had this gap, and this is the gap area of resistance where crude oil held. Logically, when it gets up there for the first time, it's going to actually have some problems. Now, if we can break down and get below the 50-day moving average and somewhere around here, I would definitely take crude oil for a long trade. And here is the S&P. As you can see here, inside day for the S&P. Now, even though we did manage to get up about $6, we still have an inside day here. Nothing really to write home about. But again, we did get a green candle. It did close up, but we're still below the 50-day moving average. I'm looking for a bigger bounce into like the 1660-ish area, somewhere back testing this long-term uptrend line from the November lows, and then fail. And that's when you want to really get a good short on. You could see that from the 60-minute chart, which I posted last week. You could see here we got the thin zone. And look, if you see what happened, we bounced off S1, rolled back up. But I do think S3 will be the first target somewhere around the 1630-ish area, 1625. And then, of course, we would reevaluate it when we get down to here. 1600 is 1596 right in this area is not out of the cards, as well as the June 24th lows. This also is in the cards as well for target areas for a deeper downside correction. And let me show you the spiders. As you can see here, the 30-minute spiders. We get the bounce that we were looking for in the opening, right? And then we just went sideways, and then we sold off. But very, very subdued bounce and very subdued pullback. So this is definitely the heart of the end of the summer trading. So definitely use caution, guys. Use your stops, please. Here's the diamonds. As you can see, this was the worst sector that we were following out of the 5 indices that we follow. The Dow Jones had an inside day, but actually lost all of its gains and closed lower. Here is the transports, and this is why I say the transports are doing really well here. Let me just open this up a little bit. As you can see here, we held that low, that horizontal trendline support, and we took out the previous day's low. Again, bullish. That's why I do think that the transports will probably pull it out along with the Russell. As you can see, Russell had a fantastic day yesterday, and it took out the previous day's low, the previous day's close, outside day reversal. Again, why I think that the markets will bounce again, following into the Fed minutes. Again, remember, anything can happen after that, whatever they talk about. Here's the SMH. Weak sector. I do like this short, but I want to see a back test of this trend line here to really get short. Obviously, for a trade, if you want to look at some SMHs, some semiconductors, look into some of the weak ones. and look for a spot to short. That you can do for a day trade. I like this back up in his area here and then fail. And here's Goldman Sachs. I like to look at Goldman. It is one of the leaders here. Goldman Sachs didn't have an outside day reversal, but held up well at the lows on Friday. So I'm still clinging to the 50-day moving average. And you can see the XLF actually did better. So some of the banks did much better than what Goldman Sachs did yesterday. So this is actually encouraging, again, for a bounce trade. I do think there is a deeper downside correction, but I do think that we got to bounce first before we can move lower. And here's Apple. Apple took it on the chin, and rightfully so. It had a huge move up here from the last 5-6 days, and just caught almost our target at 518. So if you were long, you should have gotten stopped out. Or if you are giving it a little bit more room, give it to the 498-ish area. Below 500, I think Apple will start to bleed again. So just use caution here with Apple if you're long. And then lastly is the Qs. As you can see, the Qs really didn't do too much of anything. All right, guys. I hope everybody caught that little bit of a bounce. It was really fast, and you have to be nimble here. Remember, the markets are going to be quick because there's not a lot of buyers and sellers, so it's going to move the markets in either direction rather quickly. So use your stops, and if you get hit, just step aside and say, okay, my stops were elected, I got hit, and then move on to the next trade. I like to have my trades looking at far and few setups that I'm looking at that are actually very, very good setups, and I want to only look for the cream of the crop because of the fact is that there's nobody around. You could see it by the volume. All of a sudden the volume just dries up right around 11:30, and if you got stopped out for the day, just take a step back, and there's always tomorrow. Remember, there's going to be a lot of volatility picking up here. I see it in the charts, I see it in the indicators, and let's be ready for that. You don't want to get beaten up by trying to trade every day and not make any money. It's not good for your mental psyche too. Just keep that in mind. All right, guys, have a great day. We'll speak to you tomorrow. Take care.